Welcome to BJ's Money Printing Lab. This is my second broadcast, and every broadcast I'm planning to open you guys to the trading score of mine. So the current profit that I made, YTD, is 44%, and MOM, monthly basis, is 14%. I'm opening this up to be totally frank to you. The screen capture and the evidence, I'll leave it at the last of this video. Today's title that I want to share with you guys is that one more bear market is coming. I'll give you the detailed reasons and evidences from the next slide. So the first evidence is that the PMI index is dropping. And at the November of 2022, it has gone lower than 50, and this ISM manufacturing index is related with the new orders, production, and employments, so it represents the all industry status. And if you can see from the history shows us from 1963, if the PMI index gets lower than 50, the recession came. If the PMI is lower than 50, recession came. Lower than 50, recession. Lower than 50, recession. Lower than 50, recession. Of course, not every time that the PMI gets lower than 50 came with the recession, but still, the recession came whenever the PMI index is lower than 50. So we have to be extremely careful. And at the recession bear markets, when the recession came, the average percent of the market drop reached 39.4%, and the recent two recession stage, we have seen a 50% and 57% of market drop. The COVID situation is an exception because you guys all know that the Fed, Jerome Powell, has conducted a massive stimulus package here, so there was a dramatic stock rebound. This chart, I really think this is a super important chart here. What it means is that, so this sky blue line is the period where the market has reached its bottom, and this dark blue line means the Fed fund rates. And you have to be extremely careful that the market bottom never came from the history, that the market bottom never came when the Fed was raising its fund rates and keeping its fund rates. The market bottom came when the Fed decided to lower the Fed fund rates. When the market bottom came when the Fed fund rates were going lower, and lower. So it is reasonable for us to think that the market bottom comes whenever the Fed is lowering its fund rates, which is super important. And so every recession came, there was about 50% market drop, and then recently, this is the S&P 500 ETF, there was only 20% market drop. So we can easily assume that. Show you an example. So let's say the recession will come, then the average stock market drop is about 39%, which we have seen in the chart. So the 39% drop means, based on the SPY, it's 290. And if we unfortunately reached 50% drop here, the level of SPY is about the same level at the bottom of 2018 and 2020. So it is reasonable and safe for us to expect additional maximum 37%, and well, the average about 20% more drop we can expect. So we really need to be super careful. And here also, I've shown you guys that the net market bottoms has never reached when the Fed fund rate was going upper and keeping some certain point of plateau. It was lowering, and I showed you that PMI index lowering under 50 always has become meet the recession. And also there's one more evidence here. There is a strange point here that, so this is the US dollar index, and this is the RSI indicator. The USI index is going lower and lower and lower, while the RSI indicator is keeping a resisting here, and is rather going up recently. Usually the index and the indicators move to a same way. You can easily find out that it matches, the direction matches, but there is discrepancy these days, and we can see exemplary discrepancy in the QQQ. I'll show you one example. This is one of the basic trading skills. So in 2021 December, the market was the S&P, I mean the Nasdaq index was keeping a certain point, a certain level at here, while the RSI level was going lower and lower and lower. The top became lower and lower and lower, but the indexes as sustained in a certain point, and we all know what happened after the discrepancy happened. So the market dropped about, let's say, 30% in near terms, right? After we have seen this kind of discrepancy. So what I mean by is that if this kind of discrepancy occurs, that we all know, we can know that one of the index is not telling us the truth. And certainly by seeing this kind of indexes, we all know, I think it is reasonable for us to assume that the gravity is headed to the downside, which means in this chart the US dollar index might be possibly in a high possibility to again soar. If the US dollar index soars, it definitely is not a positive way for the S&P 500 and stock markets. So this was the example that I showed you just now. And the Korean USD, the currency is also showing a massive divergence here. So this massive divergence is telling us, one of these indexes telling us the lie. And this is the blended P ratio of S&P 500 valuation. And if you can see the upper here, the upper 1 sigma, 2 sigma, 3 sigma level, is that it's saying the stock market is not cheap, it's expensive. The level of current P ratio is almost same with as 2001, when the market bubble was not still there. So you can see the market bubble is still here. And also I want to show you one thing, that the housing bubble burst didn't even started yet. We are seeing a biggest housing bubble, so we do not know when it is going to burst, but you can see that in some period of time it is going to burst, and if it burst, it is not favorable to stock markets, right? And also this blue line is the US states inflation rate YOY, and this orange line is the S&P 500. You can see that when the inflation rate is coming down, the S&P 500 plunges. When the inflation rate is coming down, the S&P 500 plunges. If the S&P 500 plunging, the inflation rate plunging, the S&P 500 plunges. And now we can see that historically we are at the point where we're seeing the historically high inflation rate, and the Fed and Jerome Powell is trying their best to track this down, this inflation, and we can expect the market additional plunge here, right? And this blue line is the PMI, is Chicago PMI index, so it's getting lower as the PMI index gets lower. The S&P 500 always plunged here. Have a look at here, plunging, the PMI plunging, the stock market's plunging, PMI's plunging, stock market is plunging. And one thing that we need to keep in mind is that the Fed, this is the M2 means the monetary policy, the money released to the market by policy. It has never been there was never been a reduction in money to the markets, but we can see here that there is a reduction in the market. Of course, there was huge amount of money released to the market, so this kind of small reduction might not impact the market very much, but the important thing is the direction. If the direction comes down, we do not know when they're going to stop, and this is going to be a huge uncertainty in the market, and the market doesn't like the uncertainty. And this is the last evidence that I want to share with you guys. This is the stock bond allocation. So when the stock bond allocation reached this peak, there has always been followed by the recession, and recession. And you can see, we can clearly see that the market, the stock bond allocation rate reached this peak, and it's going to get lower. The possibility of this going to get lower is much bigger. And what happens after this ratio comes lower? There comes a recession. And as I mentioned earlier, if we have to say hello to recession, we have to face the huge market drop, and the average is 39%. We should keep this in mind. So it is better for us to be careful at this kind of point of view. And because of this reason, I am planning to buy SQQQ, SOXS, SPXU within 1 or 2 weeks. I'm not going to buy one time at all of the money at one click, but I'm going to upload every trades that I make, why I made this trade, what was the tactics, and what is the goal price that I'm going to take profit, and what is the stop loss that I have set. So in this way, I'm going to leave every trading journal with you guys, and every tactic skills as much as I can open to you guys. So thank you for listening to this video. I hope you liked it. If you like this, please click like button and subscribe. It will be very, very helpful for me. And most of the trading skill that I learned was from this book, The Bible of the U.S. Stock Market Investing, and the author of this book also is operating the homepage lasersam.com. Unfortunately, it's Korean. I also learned very much trading skills and stock knowledges and how to make money in stocks, written by William O'Neill. He's the greatest trader, and he's a very, 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 very famous investor. And as I mentioned at the first of the video, I'm going to leave a capture of my all trading score. So my profit starting from December, this month reached about 13.7%, and my trading score profit return starting from this year, January 1st to Christmas, it's 44%. I'm opening up this to you guys to be super frank to you guys. And my current position right now, I'm holding 60% cash and 80% TMF. TMF is a leverage ETF of the US Treasury bonds, and TQQQ, 3 times the bull ETF based on the NASDAQ. This is definitely not the position that I'm recommending to you guys. The reason I'm keeping this position is that I'm expecting a small bounce in the stock market for 1 or 2 weeks, because it's the last of the year, and usually at the first of the year, which will be 2023, the market has a tendency to go up. But this is just this is not the against the gravity that we were talking about, so I strongly recommend not to follow my position. If I make a new position, I'm going to upload the video as soon as I made the trade. And again, lastly, this is our goal. So if my goal is to gain 10% a month. This is my basic goal, and if I successfully make 10% a month for consecutive 12 months, I can multiple my asset by 7 times, which is a massive huge return. I really hope that we, our listeners, and our channel becomes rich together. This is the main purpose of me to do the broadcasting here. And also, let's say if we didn't reach the 10%, but if we can reach 7% a month, then our account becomes 4 times multiple by 1 year, which is also a massive huge return. And as I showed you, I have gained 13% and accomplished my monthly goal at December of 2022. So I hope this keeps on going with all the listeners and for myself. Again, thank you for your precious time and listening to the video. At the next video, I hope I made my trade and share you guys with the techniques. Thank you very much. Bye bye.